Hey guys, Mike here. So we got another big week ahead with CPI, FOMC, and all that good stuff coming ahead. And so it's going to be a busy, busy week. And there's certain things happening, and I'm going to show you in the charts and everything, and just certain things to watch out for. And I'm curious to know if the Fed is actually watching this stuff, because the way it's setting up, this is going to absolutely affect inflation for sure, and it could affect the Fed's decision as far as like rate cuts in 2024, how it's going to affect the economy, all the stuff, right? We're going to go into all that today. But I did want to start off with this and say this is how crazy it's gotten with the Magnificent Seven. Look at this. The Super Seven, they call it, make up more of the MSCI ACWI, which I'll tell you in just a minute what that is, than Japan, UK, China, France, and now almost Canada too combined. So of course, what is it? It's a stock index designed to track broad global equity market performance, maintained by Morgan Stanley. The index comprises stocks of nearly 3,000 companies from 23 developed countries and 25 emerging markets. And if you look at that chart again, you can see right there, look at that. That's insane. That's 7 companies make up more than the rest of those countries combined in this index now. So, you know, again, money keeps piling into it, and when you got that much involved in it, it's just hard to bring it down. But this helps explain why you keep seeing not just Americans, but people all over the world keep buying up the dips in these companies and pushing them to all-time highs. I mean, you just don't think it can happen anymore. It just keeps happening, right? The other thing we got to look out for is liquidity, right? Liquidity is king, okay? Probably number one in the market. And when you look, what people are projecting here is we're going to go into another global liquidity cycle to the upside. Why do they think that? Because you already see it from China already. They're already doing it. You got other global banks. They're cutting rates right now. They're expecting, obviously, most of us are pausing. After the pause, usually comes cuts, right? I think European Bank is projected to be the first one to really do it of the major banks. And so, you know, if that happens, if you look at this and you pause it and start looking at the years and stuff, it don't line up perfectly. But when this happens, yes, you see stocks around the globe. This is probably why you see like India's market. I mean, it's at an all-time new high right now, and we'll get into our markets or where it's at. But you know, people are trying to project this ahead before it happens, and so this is really something key to watch out for. Now that gets us into really what to watch this week, right? What's going to affect markets more than anything else? What the Fed's looking at? What's going to affect inflation? And one is going to be this, you know, U.S. dollar versus the Japanese yen, right? You see a big major sell-off happening here, and you can see. There's always a trend. Any chart, you can see it. This right here can be set up just like any other chart. So when it breaks that trend line, major sell-offs happen. This right here is broke a trend line going back to beginning of 2023 now. So, and this one right here is broke a trend line going back to 2023. I mean, you start pulling up fibs and stuff. Normally what you'll see is you'll get a bounce around either 50 fib or the golden pocket fib. Right now, you look at this one, there's the 50, there's a golden pocket. So if this continues to drop, that means the dollar is weakening, then that's going to be a good thing for equities, okay? What's another thing, when you look at the dollar itself, you can see here's a trend line going back to 2011. So that probably is going to be the ceiling, honestly. Could be wrong, but you can see multiple, you know, rejections off this. And, you know, this is more of a shorter term, 2021 up, so a couple years right there. And you can see us just kind of stay in this channel. And as long as it stays in that channel, especially if it breaks the one right below it, then of course, that's going to be a tailwind. So tailwind for equities, not a headwind. So it'll be a tailwind for equities as well. So we'll see if the dollar continues to weaken. And if Japan continues to act, it should continue to weaken. And so that's really going to be good for the Mag 7 because, again, over half their income comes from overseas. So when they convert it back into U.S. dollars, their earnings are going to look even better. Okay, and there's a couple other reasons it's important as well. Now, something big to watch out for here is, and real quick, guys, if you can go ahead and hit that like button for me, help people find this video. I really appreciate it. And if you want to give me a double help today, you can hit that subscribe button if you like the content. The 10-year yield, okay, it's the most popular, obviously. And you can see when we pause, right, this is 2019, okay? They paused right there. And when they do the pause, what happens to the yields? It drops on the anticipation of what? The cut, okay? And you can see as it trends down, that is a tailwind for stocks as well. So if you get a weak dollar and weak yields, oh boy, watch out, okay? This is 08 right here. You can see dropped 15% right there as they did the pause, and then they cut. That's when it really tanks. And then when you look at what's going on now, they're in the pause, as we can see right here. You can see it's dropping dramatically. But of course, what really caused this rise quicker than anything that ever happened before is they were having problems like with the 30-year bond auctions, the 10-year bond auctions, the 20-year bond auctions, people were hesitant. It was driving those yields up even higher. So we didn't have that before. And so if the Fed does do a rate hike, oh yeah, the yields are going to pop again for sure. But if they keep pausing, we can continue to see this drop or at least not rise. And that's the key, right? That's your tailwind. What else we got going on? I've told you about this 200 coming up here, right? It was resistance for the 10-year yield. When it comes back down to that trend line and 200, is it going to continue to bounce? Or will it even get there? Because it already just bounced the other day. And again, what's funny is you're seeing yields, even when they're green, the market's still going green. It's kind of ignoring it. It's really looking more into the dollar and stuff. And so that's what I'm saying. If you get a negative dollar and the yields, or they're just not moving, they're moving sideways, that's going to be rocket fuel for this market. Now, the big thing about this is, look what's going on with commodities. You got the DBC, it's coming now into a trend line, goes back to 2016, as you can see right here, and it's sitting right on it, right? I think we actually got a bounce on this. And so people are expecting commodities, which we're going to get into, gold, silver, oil, and all this stuff, could actually bounce. And that's not good for inflation. Here's oil right here, and that's why I'm expecting, I would be shocked if inflation doesn't come in with what they expect because oil's dropped so much. But here's a long-term trend line going back to 1998, right? And you can see it's been support resistance, and we're not far off of it, all right? Not far off of it at all. There it is right there, which also lines up with the horizontal support line. And so I don't know if it's going to sell down to 66, but that is a great bounce. And if it gets any kind of decent bounce to come back up, that's not good for inflation at all because there's so much it goes into, right, for the inputs, okay? Not just our gasoline goes in the cars, fertilizer, everything like that. And you hear people out there saying, oh, man, there's going to be this commodity boom here, right, over the next, 2 years. I don't know if that's true or not. I don't really get into commodities that much. But when I'm looking at this stuff, I'm noticing these commodities, like copper's another one. Here's this trend line beginning of 2023. It was resistance. Now it broke above it, of course, in November, came back down, just retested, and now it's bouncing. All right, so I'm seeing copper doing that. When I come over here to another one, so that could be the trajectory. And if you see that, that increases the expenses for inputs, right, which is good for earnings for a lot of companies in this area, but bad for others, of course. And when you look at, silver, silver goes into, we use silver for a lot of stuff, right? Here's a trend line going back to 2009, and you can see it was support for a long time. It's been resistance, but here we are, we're right above it, right? Are we going to come back down and touch it and bounce, or are we just going to take off from here? That's another one. And so that's something to pay attention to, and I'm curious if the Fed is actually looking at this stuff going, wait a minute, if commodities start to move back up, right, what's this going to do to inflation? You're going to make core even just sticky where it gets stuck at 4%, stuck at 3.8. That's what we're looking at. So just something to keep in mind. If you're a commodities expert, please put in the bottom of the comments what you think about that. And I don't know about no super cycle. They've been calling that forever, but it's just something to pay attention to. And I wonder if the Fed is looking at this. Now, when it comes to these stocks and indexes, you can see the SPY was sitting here. It was accumulating, popped above the S&P, for example, 4,600, which was key, right, heading up. And so, it's one of those things, when it accumulates that's when you usually get a nice explosion up. But it's turning that trend line into support now. And we're only like 4% away from all-time highs, guys, on the S&P. We're going to look at the other indexes, too, to look at this. But when you look at the Qs, same thing right here. Comes down, ends up turning that July right there level into support, right? Popped up, and then it turned July high into support. And so that is absolutely key. That's not a bearish thing at all whatsoever. We continue to see sideways movement, maybe even a little down going into these prints and stuff or whatever. But again, you see what this is reacting off of. It's sucking up into a weekly fair value gap, right? That's what it's sucking up to. And sometimes you'll get a reaction down from that once it feels it, but then it starts moving up. It's just a magnet for it, okay? If you didn't watch Saturday's video, go back and watch that and you'll see. But again, where is this at as far as all-time highs? And it's not going to be the first one to touch, in my opinion. I think we'll see which one is the first one to touch. But this one's around 3.25. But the first one to reach is going to be the Dow, right? Look at the Dow. What's the Dow been doing here? Sitting there consolidating along that trend line right there, which goes back over a year. And with this one, that black line above, that is all-time highs. So the Dow, and you can see right here multiple times, this was resistance, right? So if it stays off, obviously it's not going to do it. But when you look at the trend line right below it, it's probably going to bounce off that if it gets rejected this week at all. But right there, this right here is only 2% away from all-time highs. It is the absolute closest. And, looking at this going forward, the reason why this will probably happen, and it kind of got everybody fooled, right, is the transportations. Even though they are contracting, the stocks are not. The stocks are just booming. And what happened? It came down, broke that big trend line, came back up, tested October highs, broke through. Now it's turning into support. So if it continues that bounce, then absolutely the Dow is going to do it. And you can see, I mean, that was the trend line. It came back and exploded above. See that huge candle right there? And then once it turned in those October highs into support now, if that holds, the Dow will be the first one to reach all-time new highs because industrials are doing better. Even though the data isn't super hot or anything, people just front-run the heck out of this because, again, it's all about these rate cuts and everything like that, and the Fed not raising anymore. But IWM, you can tell this one's such a hot mess compared to the other ones. We'll get into how far it's away from all-time highs. But you can see it's holding this level right here. If it continues to go up, it's going to start filling those RTH gaps. It'll be in a volume gap, so it can move up, but it's trying to hold that support level right there. Again, I'd love to see it come back down and test that trend line that it's hit twice to get a third touch before the bounce. Again, I can't make the market do what I want to do for sure, but if you look at this thing is over 30% away from all-time highs. I mean, that's how damaged it is compared to the other indexes, how bad small caps are with all these zombie companies and everything. But again, people keep buying the debt to keep them going. So I think it's what 33% hadn't seen a profit in over 5 years. And so, that's what it is. And it's one of the things, it's like high risk, high reward. But check this out. This is what I discovered when I was looking at this today. On the weekly chart, we got 2 touches on this trend line from all-time highs. And guess what we're about to come into? That trend line. And so if we break above that, which I expect the third touch you normally get a rejection off of, but it'll be great to get a rejection off that, come down to the other trend line, bounce, and if it breaks that, that's going to be an explosive move, and you will see those RTH gaps filled for sure. And so that is really what you want to see. But that's going to be a strong trend line to break. Anything that comes from the all-time highs like that, and when usually it's that third touch, we've seen it multiple times get rejected. But when it breaks above it, you're going to see a big move for small caps probably going into the end of the year. And so everything's kind of setting up for that, right? Now, I will say this, to be fair, Chinese stocks, we always talk about BABA. I know people are buying into BABA right now, and honestly, it's not so much about BABA, it's about what's going on with the Chinese indexes. In case you didn't watch Saturday's videos, I like to be fair about this. Again, once it breaks that trend line right there above it, it'd be good. But what are you seeing? The Hang Seng Index is coming into a long-term trend line. It's over 26 years old. So if it doesn't bounce here, where's it going to bounce? And we talked about these long-term trend lines, how powerful they are. The Shanghai Composite, look at that one. That one goes back to 2003, okay? So if there's going to be a bounce, and normally this is what lifts all boats right here. And so just keep that in mind in any Chinese stock. I don't care if it's just BABA. BABA is usually one of the most popular ones. So if it's going to bounce, it's going to bounce from here, all right? Now, looking at earnings. You'll have some earnings, not too much, right? Oracle on Monday, nothing on Tuesday I can really look at there. Adobe sitting there for Wednesday. And then you'll have Thursday, Jabil. The big one's going to be Costco. They've been on freaking fire, man. Lennar, the home builder, and then Darden Restaurants, one of the biggest out there, owns a lot of restaurants out there. They'll be able to tell us, are we still going out there and run up those credit cards and spending like crazy in these restaurants? Now, the economic data is going to be the big one. Okay, Monday, I don't see anything that should affect anything at all. The 3-month bill auction be just fine. Do have a 10-year note auction, so let's pay attention to that. See how the demand goes. If the yields spike, you know the demand was not very good. Okay, and these are the ones that have been a problem. Tuesday, a lot of stuff going on here. Core inflation rate month over month, year over year. You see the bar is low, folks. They're expecting core rate year over year to stay the same. They're expecting core inflation rate month over month to increase. And so, again, the bar is low. And then you got inflation rate, regular and month over month, headline inflation rate, that is, and year over year. And you can see, again, the bar is low. They're setting it real low in this. And then you got a 30-year bond auction. Watch that at 1 o'clock. Okay, that's going to be big. Now, once we get into Wednesday right here, you can see got a lot of mortgage data, core PPI stuff going on right there. I apologize, it's starting to rain now, but I'm almost done with this. And then PPI month over month, year over year, a lot of old data that nobody's going to care about at all because it's all about the inflation data, right? And then you'll have a 17-week bill auction, shouldn't be a problem. Then the Fed's interest rate decision, they're expecting to stay the same. And then, of course, you'll get the press conference and everything where the market will drop immediately as soon as he says hello and then probably rally. Remember, the first move is usually the fake out move on that one. Then we go into Thursday. You can see that's when you're going to get your jobs data out, which, at this point in time, is it really going to matter once you get your inflation and Fed information and what to see. I always love how they give us information after the Fed meeting and stuff. Then you get retail sales month over month, year over year. And then a couple of bond auctions, which should not be a problem. And then Friday, all the industrial, manufacturing, global composite data is going to come out. And so as you can see, it's going to be loaded. This is going to be an extremely volatile week. Just pay attention from like the 12th, 13th area to start moving up for the rest of the year, depending on what happens with the Fed and inflation data. But again, the bar is super low, man. And with oil being down as much as it is over the last quarter and stuff, and pretty much everything down, then I'll be surprised if it ends up missing. But you never know. Let me know what you think down in the comments of how that's going to go and stuff, where you think the market's heading for at least like the next 2 to 3 weeks. So anyway, hope you got something out of it. Hit that like and subscribe button, guys. Really appreciate it. I'm going to go enjoy the rain. We just started getting down here in Florida, and I'll see you tomorrow.